Welcome back to the channel, guys, and today we're going to be covering the most popular series on this channel, 3 stocks I'm buying for the month of January 2020. So it's an exciting time. We're entering 2020. Let's see what the stock market has in store for us. There aren't that many great deals today. However, these 3 stocks that I'm going to cover, I believe are at pretty good valuations, and I'm personally buying some of them right now. Now, if you're brand new here, hit that subscribe button down below, join the community. But either way, drop a huge like because we're trying to get 350 likes on this video. I'd really love to hit that goal and I can't make it happen without you guys. So if you support the channel, you want to support me, just drop a like down below. I truly appreciate it. But let's not waste any time here. Let's get into our 3 picks for January 2020. So here's a brand new stock to the channel, one that we've never covered here before as far as I remember, which is surprising because Cisco is a $200 billion company. Now quickly, if you're not familiar, what does Cisco do? They actually play in a bunch of spaces, and in many cases, they're the leaders in those spaces as well. They create networking equipment, telecom equipment, and other high technology products. Consumers like you and I may recognize the name Cisco from their popular routers. However, despite having a consumer presence, Cisco is much bigger in the business-to-business space. So why Cisco for January 2020? Simply put, I think that this company is offering us some pretty good value as it stands today. Cisco currently trades at around a PE of 18. However, the average PE of the business in previous years has been around a 14. So Nick, if their current PE is above their historical PE, what makes Cisco a good value? Well guys, when you're looking at stocks, and you're looking at valuing stocks, you're always trying to look at the forward potential of a company, not the current potential. So when we do that with Cisco here, based on future estimates, they're projected to be around a 14 PE by mid-2020. However, by mid-2021, this is expected to drop a little bit more to around a 13.5 PE. So although it's not a screaming value, it's still a good value, and the stock is slightly undervalued on a forward basis here. And you're actually getting a world-renowned $200 billion company that's going to be around, in my opinion, for a very long time. So another big reason why I like Cisco and what Cisco offers here is because of their dividend story. As it stands today, the stock yields a 3% starting dividend yield, which is quite impressive. But what's more impressive is the dividend growth rate of over 20% in the last 5 years, with 8 consecutive years of growth. Now their payout ratio is only around 43%, which is healthy and sustainable for the foreseeable future. So I can see this dividend continuing to rise in the coming years. But now digging a little bit deeper, in the last year, they only raised this dividend by around 8%, which is much lower than that 20% we've seen in the last 5 years. However, even at 8%, it's still a respectable growth rate. As we continue with a slowing economy, I think it's more realistic to see this dividend raise in the 5-10% range in the coming years. However, in the next big economic cycle, I think we'll see these raises back in the range of 10 to 20% year over year. But in the meantime, I'm fine holding Cisco stock here with a 3% starting yield and a pretty decent growth rate, even if it is in the single digits, and kind of just waiting this out until we hit another super cycle here where Cisco, I think, will benefit greatly. At current prices, analysts see around a 13% upside in Cisco, which is fair. However, like I said, the more appealing thing about this company is not the capital appreciation, it's the potential for it to be a strong dividend growth stock in the future. As for the charts for Cisco, we see here that we're currently sitting near a 25% correction in the stock. And based on the last few years, you can see that Cisco doesn't correct all that often. In fact, historically, it seems that the average correction for Cisco is around 20-25% range, which coincidentally is right where we're sitting at today. Now, this does not mean we can't go any lower, but in my opinion, this is a good base to start out a position in. And if we drop below the $40 range, at that point, Cisco would be a screaming buy. This is because if that does happen, the 4PE would be near a 12, which is just too cheap for a stock like Cisco. Nonetheless, I think Cisco is an incredible tech company, a great blue chip stock, and for a lot of you dividend growth investors out there that have exposure to a lot of consumer stocks, McDonald's, Pepsi, Procter & Gamble, whatever you have out there, a lot of you guys don't have much tech exposure because there aren't many great large tech companies that consistently grow their dividends out. But Cisco may be one that's worth considering because as it stands today and looking at their fundamentals, it seems like this dividend could stick around for a very long time. Okay, let's move on to our second pick. So Pfizer is another massive, massive company, around a $215 billion market cap. And as it stands today, Pfizer is actually offering us some pretty good value. Now this is a company that's in the pharmaceutical space, and we have covered Pfizer recently, but let's take a look at how the value stands today. Real quick though, if you haven't heard of Pfizer, just do a quick Google search and you'll see a lot of brands that you're familiar with. Have you ever used Advil, Robitussin, or Centrum? Yep, then you've used a Pfizer product before. So looking historically at the PE here of Pfizer, I think it's fair to say that around a 16 to 17 PE is around a good average for this company. And as it stands today, we're sitting at around a 14, which is well below this range. So right off the bat, from a current valuation standpoint, we appear to be undervalued here. And now adding in the numbers to look at the forward PE, Pfizer still appears to be around a 14 PE. So what this actually tells me is that the market is pricing Pfizer slightly under its fair value right now and for the next year or so. So this could be an opportunity for us to pick up a world-renowned company at a fair valuation. And guys, you know I love my dividends, which is another big reason I love Pfizer. They currently have a starting yield of 3.76%, and I'm not complaining as that's a nice starting yield for this company. And the dividend here has been growing on average by around 7% year over year, which is about on par compared to other big pharma names like Johnson & Johnson. Pfizer has also raised their dividend for 9 consecutive years, and we can see here that during the last recession, they did cut this dividend, and this may be a risk in the next recession. However, even if this does happen again, the value that the stock provides today makes up for this risk. Also, you may have noticed that in recent years, the dividend growth rate has slowed down a bit here, and this is because they are currently undergoing a big merger with Mylan for certain aspects of the business. So this requires some cash commitments, and as a result, they have chosen to slow down but still maintain that dividend growth rate for now. And this merger, at least from a high level, appears to be a good thing for Pfizer, as revenue and profits are expected to benefit significantly in 2020 from it. So because of all of this transformation that's going on with the business, certain parts of the business, there is some inherent risk here with Pfizer, which is why the stock is trading at the valuations it is currently. But as a long-term investor looking at a world-renowned company like Pfizer, I think it's an opportunity here for me to actually go in and build out a good position in this company. Now, what's interesting though is that analysts actually believe Pfizer is at around a fair value, which again, if we look historically, isn't necessarily true. That being said though, earnings is expected to slow down in the next few quarters, which is why they may be a bit more pessimistic on the stock right now. Now that being said, looking at Pfizer's charts, ever since the recession, this company has performed well, having a few hiccups here and there, but for the most part, it's moved upward and to the right. Most recently, we saw a 25% correction in the stock, which was an ideal entry in hindsight. However, even today, sitting near around 15% down from its highs, we're still at a good entry, in my opinion, in Pfizer. Now, at current prices, may not be the best decision to put all of your capital into this stock. Maybe good to start out a position here, and if we drop a bit lower, average into that. But when we're looking at kind of the fundamentals here, the dividend, the PEs, the forward PEs, everything seems to be looking good for Pfizer. And to have a world-renowned company like this, a $200 billion plus company like this in my portfolio, I personally would not hesitate on how to add this to my collection of stocks. I know a lot of you guys who are not pure dividend investors are probably very heavy in growth names and tech names, but Pfizer is a company that you may want to look into because it does provide you some upside growth, especially with this merger that's going through. And in the next few years, the stock could see some good capital appreciation while also potentially raising that dividend as well. Of course, I could not leave this company off the list here, and some may even say this was the most obvious pick here for January 2020. Boeing is one of the largest companies in the world, and it will continue being so, at least in my opinion, in the next few decades. They've seen a ton of negative press and issues with some of their airplanes in the last year or so, and as a result, the FAA has stepped in, and that has caused some turbulence here in terms of Boeing's stock, in terms of Boeing's earnings, and just in terms of the company's image altogether. However, what I find very interesting here with Boeing compared to other companies that get hit by the media with negative press is that Boeing is actually holding up, in my opinion, very strongly despite everything going against it. Sure, we're down over 25% on the stock, but we have seen other large tech giants face similar attacks from the media in the last couple of years, and their stocks dropped nearly 50% fairly rapidly. Apple and Facebook are two behemoth companies that come to mind. Yet in Boeing's case, earnings have suffered, media is still pressing down on them, yet the stock is down around 25% or so. And I think this right here shows us the strength of this business and the amount of confidence investors have in this business and for Boeing to get past all of this negativity. Now, I just actually recently made an in-depth video on Boeing, on why I own Boeing stock and why I'm continuing to buy Boeing stock here going into 2020. So if you are interested in that, I will leave a card up here, so check that out. I'll also leave a link in the description down below. Make sure to watch that whole video through because I give you guys a detailed explanation on my reasoning on why I believe Boeing stock is currently undervalued and is actually an incredible stock to hold for the long term, not only for capital appreciation, but also for, you guessed it, dividend growth. So that kind of concludes our 3 stocks here for January 2020. Let me know in the comment section down below which one of these 3 stocks or 2 of these 3 stocks or all 3 stocks you would personally purchase. And if you disagree with me, I'd love to hear your thoughts on those as well. As always, guys, thank you so much for watching. If you're brand new here, like I said, hit that subscribe button. But regardless, if you're new or you're a returning subscriber, hit that like button down below because that supports the channel more than you can imagine. I truly appreciate each and every one of you. I wish you all the best for the upcoming year, 2020, in terms of your investments, health, and just life in general. But either way, guys, no matter what happens, don't forget to invest positively, and I'll see you in the next one. Peace.